10 stocks that are on sale today. That's what we're about to get into here today, folks. I'm about to take you through 10 different stocks. Some of these are dividend stocks. Some of these are value stocks. Some of these are more growth-oriented stocks that are on significant discounts, that are very undervalued, that have some pretty good prospects over the next several years. And so I just want to get straight into this. I appreciate you guys joining me. By the way, I thought it was an important video to make. You know why? Because everybody this year is paying attention to NVIDIA, and NVIDIA is nearly $500, and so it clouds everybody's mind in just thinking like, oh, nothing's a good deal. NVIDIA is nearly $500. It started out this year $100. In reality, I can tell you a lot of stocks are down significantly. A lot of stocks are heavily discounted. A lot of stocks are at multi-year lows right now, folks. You got to open up your mind and expand a little bit beyond just one stock in this market. I appreciate y'all joining me as always. Thanks for being subscribed, folks. By the way, let me know in the comment section if you enjoy a video like this where I go over a bunch of different stocks, okay? So first one up here, Cheesecake Factory, number one. Forward P on the stock is about 11 right now. They're going through extraordinary EPS growth on a year-over-year basis. Obviously, that's not sustainable, right? 72%. Their EPS was up year over year. On 4% revenue growth, that's not sustainable. But nonetheless, when you're at a forward P of 11, all they have to do is just have a few percentage points of EPS growth, and this stock can be a huge winner. Very nice dividend yield on this one, 3.3%. In regards to Cheesecake Factory, stock's done very bad the past 5 years, right? Down 40%. Why is this? Well, one, restaurants were shut down during Rona, right? That was a significant hit to their business. Two, they got hit by massive amounts of inflation. Inflation in the restaurant industry is one of the hardest hit industries. The reason being is you got all your raw materials, plus you have wage inflation, right? And also the consumers hit all simultaneously, so it's kind of a really, really bad scenario. But with that being said, let me drop a little gem for you guys out there, because a lot of people think, okay, if a stock did bad over the past 5 years, it's due to, it means it's a bad stock. It's not going to do well over the next 5 years. Cheesecake Factory is a very cyclical stock. All stocks are a little cyclical, to be honest. They have big ups and big downs. But Cheesecake Factory is one of the most cyclical stocks I've ever seen in terms of having some unbelievable 5-year spans and horrible 5-year spans. Get ready to see something absolutely shocking. And remember, this stock's down 40% over the past 5 years, okay? So if we take it back to kind of like 2012 through 2016, the stock was up 128%, right? So this stock was high flying. It was doing amazing as far as the stock price goes, right? And you could have thought, okay, the stock's doing so amazing, such an amazing stock, I need to buy it, right? All to get down 40% over the past several years now at this point in time, right? Now, you go back 5 years pretty much prior to that, right? Look at 2009 through 2014. The stock returned over 500%. Over 500 flipping flapjack and percent. That's incredible performance, right? For a stock like Cheesecake Factory. So you might, geez, during this span, you thought this was the greatest stock in the creation of mankind, right? Let's back it up another 5 years. Well, from 2004 through 2009, the stock fell nearly 70%, right? Nearly 70%. But what about the previous 5 years? Well, it was doing amazing the previous 5 years. This is kind of like 99, 2000-ish through 2004. Stock was up 378%. So if you're always basing everything off of, well, it did great over this 5 years, it's going to do great over the next 5 years, or just because it did bad over the last 5 years, it means it's going to do bad over the next 5 years. That's not how it works. It all comes down to the business model and the valuation you're paying. And right now, Cheesecake Factory has an unbelievable business model. Inflation's going away. It's not fully gone, but it's definitely going away now at this point in time. And we're talking about a company that has a forward P of 11 on this stock. So the upside is pretty darn amazing in Cheesecake Factory, and this is a very undervalued stock. This is a stock that's trading on sale right now, okay? Number 2 at 10, second stock up here is Mattel. Now, this stock is a little bit of a confusing one. It doesn't look like the greatest deal in the world, forward P of 19, which is roughly in line with the market as far as where the market's trading at. The numbers were really bad the last several quarters for this company, but what happened with Mattel is they just went through a game changer in their business model. This company just launched the 17th best grossing film in history in Barbie. The 17th best grossing in history. That's absolutely incredible, right? And it's still in a lot of theaters, so we'll see where it finishes out at when all the numbers are said and done. So we got a company in Mattel here that just changed the game for themselves, and they're going to be able to make many other successful movies in the future. I don't know if they'll always produce, a top 20 best-selling film in the history of films. I don't know about that, but this company definitely has a DNA to create other successful films. And when they create these films, they can make money off those, obviously, several different ways. Obviously, licensing is massive. Toy sales, massive for this company, right? There's so many, when you go down the rabbit hole of how many different ways this company can make money, it's extraordinary when it comes to Mattel. So it doesn't look like, oh, this is the best deal ever. It's like, it kind of looks like a sleepy one, but it's a sneaky kind of, stock that's on sale, in my personal opinion. This stock should be $30+ right now, in my personal opinion. I don't think the stock price has reflected the realities of how big the film was and how much of a success it really was. Okay, so that's number 2 of 10 up here. What's number 3 of 10? It is Meta. So this stock has had a tremendous past, let's call it 10 months or so, right? The stock fell all the way under $100. Should it ever have been under $100? No. Should it ever have been under $200? No. That was silly, okay? But they pushed it down there. Everybody ran out of this one as fast as they could. No, you back it up on a 5-year basis, and the stock's just done okay. Up 67%. And you look at what they've done over the past 5 years as far as their net income and their profitability, and their revenue, it's like night and day difference, right? Now, the interesting thing with Meta is a 4P on the stock's 23. This is why you got to look a little deeper than just, the stock price has gone up a lot, it must be overvalued. No, it's actually significantly undervalued. 4P at 23. A stock that's as safe as Meta should be trading minimum 25, if not 30 PE. But it should actually be trading far exceeding that, because this company's growing EPS 20+%, and they're growing revenues double-digit percent. When you can grow revenues and EPS double-digit percentage, and you're growing EPS at even a faster clip than revenue, you're talking about you should be commanding a minimum 30-ish forward P, but probably closer to a 40 range on that one. And so when I look at a stock like Meta, significantly undervalued, despite the massive move it's made this year, it's still undervalued, very undervalued. It's just not as silly as of a deal as they gave us last year. But remember, last year was so unrealistic. Don't even compare things to last year, because remember, they sold Nvidia stock down to 110. That stock's nearly $500 now, right? They sold Meta under 100. Obviously, we know where that's at now. They sold Tesla all the way down to $101. Like, people just sold out these stocks like insane. Netflix was at $170 last year. It's $400 and something today. Shopify fell to $25. Look where Shopify is today. Like, I could go through a million examples of just unrealistic, just insane discounts they threw on stocks last year. The bottom line is, what is it today? Are you getting it undervalued today? And Meta is a steal deal. Number 4 at 10 up here is a dividend beast, WBA, Walgreens Boots Alliance. The company's trading at a forward P of 6. 6. Now, if you are trading at a forward P of 6, is basically Wall Street saying you're done. You're done. And the stock price has been treated like it's done, right? The stock price is down 62% in the past 5 years. Between a forward P of 6 and that stock price, you would think this company's numbers have to be the worst. They're completely finished as a company. They're going to go bankrupt. They're done, okay? Well, what if I told you that's not the situation? Look at this company's numbers. The revenue on a constant FX basis is up nearly 9%. This is the latest quarter. Now, they had a bunch of one-time costs that messed up GAAP numbers, so you got to look at the adjusted numbers for what the company's at right now. They grew operating income on an adjusted basis. They grew net earnings on an adjusted basis, constant FX, and they grew EPS on an adjusted basis with constant foreign exchange. So when you look at it from that context, you would think this company's revenues are down 30, 40, 50%. And they're done as a company. And when you're reality, you kind of peel it back a little bit and you look at the company, you're like, no, this doesn't, the numbers don't show what the stock price shows. The stock price shows this company's done. And when you look at the numbers, it looks like this company's just trucking along just fine. Is it the fastest growth company in the world? Heck no. But are they still putting up pretty darn impressive numbers? Abso-dang-lutely, right? So that's Walgreens Boots Alliance. It's definitely a pretty insane discount. I'm amazed it's trading where it's trading. But, yeah, I don't think it's going to trade down there forever. Let's just put it that way, okay? Alrighty, next stock up here, number 5 of these 10 stocks is Target, another retailer up here, TGT on this one. So Target trading at a PE and forward PE in the 17 range right now. Stock's done decent over the past 5 years, up about 49%. Now, something interesting that's going on with Target right now, their earnings per share is skyrocketing. Their revenue is actually going down. And they have a dividend yield on this one about 3.4%. Now, in terms of revenue, I believe they're going to get back to growth, probably at the end of this year, but certainly in 2024 when it comes to revenue. And I believe their earnings per share should continue to go up in future years. Now, is it going to go up 357%? No. That's unrealistic, obviously, right? But I believe they can grow their bottom line this pretty much equally to what they'll be growing their top line in future years. So when I look at Target, it's just one of those easy money stocks to just throw, it's not like I have to worry about like, oh man, is Target going to make it? Like you go to Target, it's always busy, always doing numbers. And, I believe they will get the shrink problem under control. That's something that's plagued them bad for the past year. And I believe they will get that under control, and it will be brighter skies and brighter days for Target over time. And so, yeah, that's number 5 of 10 stocks up here. Number six is Whirlpool Corporation, WHR on this one. Now, Whirlpool is a funny one. Forward P is a 9 on this company. Now, never expect Whirlpool to usually trade at super high forward Ps. Like it's almost always going to be under 20, and sometimes when it's very discounted, it's going to be under 10. This is a stock that in the past 5 years is up like 10%. But the thing to keep in mind with Whirlpool, right? All their numbers have been bad recently. But keep in mind, it's going through one of the worst housing markets in the history of housing markets, literally. When you look at existing home sales, the only time period in the past 25 years we've been lower than this was during the great financial crisis and during the housing bust. Let that sink in for a moment, right? Obviously, the existing home sales are not going to stay down here for all of eternity. They're down here now. It is what it is. But I highly doubt they're going to be down here for the rest of eternity, right? And we're probably going to go through a much upped cycle in future years. Maybe it starts in 24, maybe it starts in 25. We'll see what happens. But Whirlpool is actually a company that would be very positively affected even if home prices came down. And the reason being is we need to lower interest rates and free up inventory. Because right now, a lot of people are just sitting on their homes that are sitting on 2 and 3% mortgages, 4% mortgages. And so right now, mortgage rates being 7% plus, a lot of people aren't moving right now. It's not going to stay like that forever. Let's just put it that way. If you think they're going to stay like that forever in terms of rates, I think you might be mistaken there. So rates will eventually adjust. Existing home sales will eventually open up here, and a company from like Whirlpool will definitely benefit from that. But they're feeling the effects of interest rates being where they're at right now, and they'll continue to until inventory kind of frees up here. Okay. Alrighty, next stock up here, number 7 of these 10 stocks that's on sale right now is PayPal Corporation. I think you knew this one had to be on the list at some point in time. If you're a loyal watcher of the channel, you knew PayPal had to be on the list, right? I mean, PayPal is real simple, and I talk about this stock so much, obviously, right? Their last quarter, they grew revenues 8%. They grew earnings per share over 60%. The stock's trading at a forward P of 12 on the company. Are you kidding me? The stock price is down 31% in the past 5 years. They own 2 of the top 3 most dominant finance-related apps in certainly the United States of America, if not the world, PayPal and Venmo. They have this Braintree service, which is absolutely phenomenal back-end solution for merchants. They own some other businesses as well. And my gosh, just growth for as far out as the eye can see in terms of revenue growth. And I believe they'll be able to grow their bottom line at even a faster clip than their top line. So when I look at PayPal, they got a new CEO incoming. I'm sure he'll help take the company to the next level. And I'm sure once he gets on the job, it's going to be a welcome, thing from Wall Street, in my opinion, because Wall Street didn't really like Dan Schulman, the old CEO. You can see the way the stock has performed. Like they just didn't like him. They didn't like his strategies. And now we got Mr. Chris coming in from Intuit. Intuit, one of the most beloved stocks in the stock market. This man knows how to play the game of running a great business, building a great business, and simultaneously running a great stock. And so we'll see how everything transpires. But PayPal definitely severely on sale right now. Okay. Number 8 of these 10 stocks up here is Estee Lauder. So Estee Lauder is a funny one here. Okay. So first off, you've never heard of Estee Lauder. They own almost all the big makeup brands that are on the high end, okay? We're not talking about, these aren't the makeup brands you're going to find at Walmart, okay? These are makeup brands that their products can be $50, $100, $150, $200. Like these are high-end products, okay? Now, when it comes to Estee Lauder, their margins are always amazing. And the company has these brands that are just so well established on the highest tier possible, right? But with that being said, the company's gone through some problems recently, right? And if you look at the stock price for Estee Lauder, this is actually horrible performance, 16% in a 5-year span, horrible performance for Estee Lauder, right? Now, Estee Lauder has been a company that always figures it out, turns the baby around, and gets the ship back going in the right direction. And I wouldn't be surprised if within the next 12 months, this ship gets in the right direction and starts kind of moving from there. But these sorts of companies just are not the attractive play right now. Not the attractive play right now. This is sorts of businesses that are really being hurt over the past several quarters. I don't believe it's going to last long term. I believe it's going to last short term. Let's just call it that when it comes to a stock like Estee Lauder. Now, when it comes to Estee Lauder, this is a stock that's, over time, a phenomenal stock. It's even after this insanity drop here, the stock still is up nearly 1,700% over the years. Oh, we're switching cameras. Hello, there we go. New camera alert. Nearly 1,700% over time, right? So the company's performed tremendous, certainly since the great financial crisis. They're going through a lot of troubles in the short term. I think those troubles will start to abate probably in the next year. And then, the company will get back going in the right direction. In the meantime, e.l.f. has really stolen the thunder of the entire makeup industry. I mean, the numbers from e.l.f. have been absolutely incredible. It's a stock I own. It's, given me a 1,777% return on my 1,000 shares I have here. It's done tremendous. And they've just been doing the best job running their business. This is the most well-run makeup beauty-related company in the world right now. It used to be Estee Lauder, and e.l.f. took the mantle. But the thing that's the difference between e.l.f. is e.l.f. is perfectly positioned for a market like we've been going through. High inflation, consumer got hit bad, right? That's perfect. That's right up e.l.f.'s alley, because this is what I always called out since I started investing in e.l.f. in 2019. This is a company, when we talk about e.l.f., that really caters to the masses, right? Most e.l.f. products are under $15. Many of them are under $10. It's not like an Estee Lauder that needs to sell to somebody that has a big budget and can afford a $100 product, a $150 product, a $75 product. For e.l.f., you spend $75, you can get a whole bunch of stuff, and it's all high quality. That's what the consumers have always said over time in regards to e.l.f. And so this is a company that's it's stolen the thunder, and it's got it right now. It's got it. I don't know if it lasts forever, but right now it certainly has it. And we'll see. I think there's a world where e.l.f. can do very well and Estee Lauder can do very well, right? And I have no position, obviously, in Estee Lauder, but I might in the future. It's a great company, and they are at the highest end. Next one up here, stock number 9 of 10 is Scotts Miracle-Gro. Yes, you heard me right. Scotts Miracle-Gro, forward P is 16, fertilizer company. Stock's been hit heavy over the past 5 years. In the past 5 years, Scotts Miracle-Gro is now down. It's lost nearly a quarter of its value in the past 5 years on this one, right? This is just one of those companies, it's once again kind of a cyclical company. It goes through these really exciting 5-year spans where the stock is just, seems like one of the most consistent stocks in the stock market. It goes through these 5-year spans where it's just like, clearly no one wants the stock, right? At the end of the day, Scotts Miracle-Gro, it's going to be highly relevant in 3 years, 5 years, 10 years from now, okay? The company's been here for a long time. It's going to continue to be there. There's no crazy innovation going on that's going to somehow eliminate them or something like that, other companies might face. So Scotts Miracle-Gro beaten down dog stock and actually has a pretty bright future, and it's actually trading on sale, which is, for that stock, it's not usually a normal thing, right? But this is way stocks perform, man. Even in these sleepy stocks that people don't think about, it's like Scotts Miracle-Gro, fertilizer company. You kidding me? The stock had a blow off top to nearly $250 or so. I mean, the stock went from $50 to $250 in a year and a half, 2 years. It was incredible. And then now it's had this way overdone just of the stock that's just insane. This is stocks for you. And this is where the great arbitrage is for us as individual stock pickers, because we're able to look out there at thousands of stocks and find ones that are just trading very undervalued at times, right? And this is just another example of one of those companies that's trading at a huge, huge discount right now. That's a funny one. It's a funny one to be trading at a huge discount. But yeah, even fertilizer companies can trade at massive discounts, okay? All right, last one up here. Number 10 of these 10 stocks that is a tremendous, let's call it sale right now, a deal, is Wynn Resorts. So, Wynn Resorts. This is a tricky one because if you look at Wynn, right, well, the stock price is down 27% over the past 5 years, so it's been a poor performer the past 5 years. Obviously, they dealt with Rona, there's shutdowns, all that crap they had to deal with, right? Vegas is doing very well right now and probably going to do even better. We got Formula One coming in November. We got the Super Bowl coming in February. And obviously Vegas just puts up Vegas numbers anyways. But those are two insanely huge world events that are coming to obviously Vegas. So Vegas is going to continue to put up great numbers. Boston's been doing pretty well as well, right? Macau we'll get to in just a second. There's been a huge change in Macau that's benefiting Wynn in a tremendous way, okay? But when it comes to Wynn, obviously, their revenue growth, everything looks pretty insane right now, right? And the stock's trading actually significantly undervalued because Macau's just coming back. They just finally started to open back up Macau this year, okay? I know, that's insane. Like, China really kept things shut down that long. No, as far as the first half of the year, we got back to 71% of the first half of 2019, okay? So in terms of the first half, we weren't even back to 100% of what the, Macau in general was doing back in 2019. My expectation is second half, we're going to get probably pretty darn close. Based upon some of the numbers I'm seeing out of Macau GGR, I'm going to have to say there's a good probability we're going to get back to 100% of where we were at in 2019, if not over 100%. And that's a game changer for Wynn because their revenue is skyrocketing, their profitability is skyrocketing, their net income, right? Macau's gross domestic product, GDP, rose by 117% year on year in real terms in the second quarter of this year. That's incredible numbers, right? I imagine the third quarter is going to be insane growth and the fourth quarter as well, right? And then that puts us into 24. And keep in mind, this is all going on while China's weak economically. Think about that for a moment. You got youth unemployment super high in China. Everybody's talking about, how bad the economy is in China right now. And despite that, Macau numbers are already starting to come in and be very, very impressive. Now imagine when we lap these numbers, and imagine what the numbers will be next year, and then imagine if the Chinese economy can get in a little better state. Then what are we talking about? So Wynn's one of those stocks I look at, and by the way, they're building actually a huge property in the Middle East, the first of its kind over there, which is going to be a pretty exciting opportunity in that region, obviously, right? So when I look at Wynn, I look at a stock that's actually significantly undervalued right now. Obviously, there's always a risk of recession out there and things like that, but when you're dealing with a company that they already had their worst case scenario. Worst case scenario is not a recession for Wynn. Worst case scenarios were what the company had to deal with for the last 3 years, which was Macau being shut down. Macau was basically shut down 2020, 2021, and 2022. Three years. It was basically shut down. I mean, they would kind of open up a little bit and let some people in, but it was like basically shut down. And so that's off the company now, and that's massive for Wynn. And so that's just another stock that is actually on sale under $100. Is pretty attractive for me. I appreciate everybody joining me as always. Thanks so much for being here. Thanks so much for being subscribed, folks. If you're looking to apply, join my private group. Check out the description area down there. Also have it as a pinned comment. You can fill out an application. We see if you're a good fit to join us in there. Much love and have a great day.